Hi everyone and welcome to episode 8 of Coffee with Cheese. I'm your host, Narciso Bomben. In last week's newsletter that I put out, the topic was feeling the strain, and it focused on a lot of different things that we're dealing with these days during the pandemic that typically can lead to fear, uncertainty, and doubt. So what I thought I'd talk about this week is the important topic of insurance and how this can play a role in your personal situation in relieving some of that stress you might be feeling. Okay, so I've been also getting a lot of questions around insurance and how it works and the different types, so I thought it was a perfect topic to discuss this week. Now, I should use this opportunity as a reminder to say when it comes to solutions such as insurance, not unlike investing, this is really meant for educational purposes only. It's not advice for you specifically. To get personalized advice, you really should be dealing with a licensed professional to talk about your situation in particular, okay? So let's talk a little bit about insurance and first at an umbrella level and what it is. It's really about risk management, but it's also about the transfer of risk. So what do I mean by that? Well, if something were to happen that you want to protect against, if you don't have insurance, essentially what you're doing is you're self-insuring. If that does transpire, you're going to need to pay for something yourself, right? You're either going to have to replace your income or fund a need. Whereas when you invest in an insurance policy, you're transferring the risk to the insurance company. So by paying regular premiums, whether you decide to pay them monthly or annually, that particular risk has been transferred to an insurance company. And why we do that is we want to protect our net worth. I talked a little bit in the last episode about protecting net worth if something were to happen. If you're self-insured and you need to pay for it, it's typically coming out of savings, or you might take out a line of credit. And if you do that, essentially what you're doing is you're reducing your net worth. So let me talk about the three main types of insurance from a financial planning perspective. There's many different types of insurance out there. So I want to talk about life insurance, disability insurance, and critical illness insurance. Let's first talk about life insurance, probably the most common one we hear discussed. So the purpose of life insurance is in a situation where an individual passes away and they want to do one of two things. During their lifetime, when they have various debts such as a mortgage, maybe they want to pay for kids' education, certainly income replacement depending on the spouse that were to pass away or the partner that were to pass away. These are the needs you're looking to cover. Whereas if you're looking at something like permanent insurance, which I'll describe in a second, it's really about estate planning to cover taxes in an estate, maybe expenses associated with an estate such as probate. So it really comes into play when someone passes away. Now, as I already started to allude to, there's two different types of life insurance at a macro level. There's term and there's permanent. Term insurance is as it sounds, right? It's for a particular period of time. The most common are 10 and 20-year term policies. And typically we find that these types of policies are used for needs that will go down and be eliminated over time, such as paying off your mortgage, kids going to school, the need for income replacement going away as you get closer to or at retirement. Whereas a permanent insurance policy is essentially something that is in place for a need that will be there. So whether you want to leave a specific legacy to an individual, a charity, whether you know for sure through working with your planner that there's going to be taxes in your estate and you don't want shrinkage in your estate, then you want to make sure that there's a policy in place that will pay for that. Okay? Another very important part with any type of insurance policy, but I'll certainly speak to it here, is a needs analysis. This is the personalized part that I'm just going to create some awareness around what you should be doing with a licensed professional, is really understanding your situation. I talked earlier about, is there going to be the need for income replacement? Are there kids in the picture and you want to pay for their education? Is there a mortgage debt, taxes in the estate? By doing a proper needs analysis and comparing this as well to what insurance might already be in place through either an employer or another policy, it really allows you to understand what is the risk you're trying to cover through the gap and then have a proper solution in place for you. Now let's move on to disability insurance. Disability insurance really comes into play around income replacement. So in the event of a disability to a worker, an income earner, you're able to replace a certain percentage of your monthly income while you're off work and qualify through the policy. There's different types of policies, but the most common ones are ones that really go to 65 or an age that you're anticipating retiring, because again, if anything happens at any one given time while you're earning an income, so this is really about protecting an income stream, because if you don't and you're off work, whether it's through employment insurance or even a work policy that doesn't really cover as much of the needs that you need, then you're going to eat into your net worth if you're not able to reduce your monthly expenses, which is a challenge for a lot of people, right? And you typically don't want to be put into that place, let alone potentially have to stop savings because the income is not there, okay? So what I'm also going to introduce as it relates to disability insurance is something called a rider. Think of a rider as an extra option or flexibility you have with your policy. So in the case of disability insurance, some common riders are future insurability option. So if you're in a profession where your income will rise over time and you want to add to your monthly benefit through your policy, well, this rider allows you to do that without needing medical underwriting again. So that's one. Cost of living adjustment rider is also another common one where inflation is a very real thing that I've talked about in previous episodes. So cost of living adjustment rider allows you to protect against inflation down the road. Now lastly, I wanted to speak a little bit about critical illness insurance. Critical illness insurance is really an insurance that protects against, in and around, depending on the policy and the carrier, 25 or so common illnesses. The three big ones are cancer, heart attack, and stroke. Okay, so in the event that you're diagnosed with one of these illnesses, whether you can go back to work or not, you're paid a lump sum. I should have mentioned earlier that disability insurance is a monthly benefit to replace that income stream. Critical illness is a lump sum. Think about it as almost a healthcare and lifestyle expense in the event you're diagnosed with one of these critical illnesses. And it really creates flexibility. It creates flexibility that, in the sense, if you can and are able to go back to work, but you don't want to, you could stay at home for a period of time. If you need medical coverage, whether that's a diagnosis through something where you need a prescription for, a monthly prescription for, but it's not covered by your provincial healthcare benefits, then your critical illness insurance policy can cover this. So it creates that flexibility. As far as terms are concerned, there are many different options. I typically see, you've got term 10, term 15 policies. You can certainly go to term 65. Again, this is something you need to figure out with a licensed insurance professional, but there is flexibility there. And similar to my comments around disability insurance and riders, some common riders you find with critical illness insurance is what's called a return of premium. So a return of premium either on expiry of the contract. So if you have a term 15 contract, you never use it, you can get your premiums back. There's also a return of premium on death, if there is a death during the policy and you've never made a claim. So again, these are different options, flexibility that exists that you should review with a licensed professional. So that closes out this week's episode. Just a quick reminder that Tuesday, January 26th is my next webinar, Master Your Retirement. So that's coming up. I'm recording this on the 25th, so depending on when you watch it, it might have already passed, but just a quick reminder. And then as always, I welcome any questions, comments that you may have through the post. If you want to reach out to me directly for a virtual one-on-one coffee, it would be my pleasure to do that as well. So thanks for watching, and I wish you a great rest of the day.